We are back with you, and as promised, we're going to welcome our in-studio guest, Mr. Chris Swift of Swift Trading Incorporated, based in Nashville, Tennessee. And thanks for coming in.
Yes, sir.
We're getting ever so close to the end of the year.
Absolutely. Happy New Year.
Ready? Happy New Year.
It's close enough to it.
Everybody getting positioned for it, I understand.
Yes, they are. Yes.
So I always kind of caution everybody, just expect a lot of funky things on the last couple of days of the trading year.
Right.
So we're coming up on the end of the trading month, the end of the trading year, trading decade.
Trading decade, yes. The Roaring 20s. We're fixing to get to live through the Roaring 20s.
Wow. Now you're making me feel real old. I hadn't thought of it that way, but wow, getting into the 20s. Gosh, starting Thursday or Wednesday already. Okay, we're going to come and take a look at grains this time around, and then livestock the next segment. Let's look at grains right now, and I want to get your thought on this, Chris.
Okay.
The corn market opened up about a ½ cent higher this morning. Overnight, it was about $0.015 higher, and it looks like we're just kind of sliding away here. Down 3/4 now at $3.89 1/4 on the soybean side. Soybeans were higher, about 6 cents overnight. Excuse me. Now we're up about 8 1/4. We're at 9.37 3/4. I will mention it was up about 10 on the open, so kind of sliding a little bit there. Let's look at the wheat in Chicago wheat. Right now, everything is really quieting down. We have March up 1/2. We're at 5.56 3/4. Well off its overnight high by roughly 8 cents here. July up $0.015. I want to throw in the oats market too here on the oats on the March contract. Let's take a look there. We show March now 2 higher at 2.90 1/2, and the May 2 1/2 higher at 2.88. Of course, the old saying we always joke about oats knows. We just don't know what it knows.
That's right.
But it is higher on the day, so it's actually trading higher than what the corn is. I mean, relatively speaking, it's making a bigger move today. Could that be weather related? There's a lot of weather up in that part of the country, but they're not growing oats right now.
No, it's possible. I think each one of those grains have a little bit of uniqueness to themselves as far as the day in, day out fluctuation. But as we were talking a little bit earlier before we came on air here, the dollar has made a move. And so the dollar has been stuck in a very finite trading range for the last 18, 19 months. Now it's broken lower out of that range. We've seen some interest rate manipulation over the last 6 to 8 weeks that may or may not be doing the intended purpose. So now that we're getting a lower dollar, that should be of great benefit to our importing countries that import U.S. grains.
Down 140 points, I see, on March futures contract.
Yeah, it's interesting to see. So I think that could give a pretty good sized boost to the grain markets coming in. And then as we get into the January report, we find out what we do or do not have from the previous year.
Which comes out, when is that, January 10th?
January 10th, yes.
So we're getting
really close to it next week.
Yeah. So, and then that also will roughly coincide with supposedly the signing of that phase 1 deal.
Yes, sure will. A lot of information coming out right here at the first of the year, and money likes to advance and get in front of things, and we're already kind of seeing some market movement over the last day or two that suggests money's moving a little bit.
And this would also be at the same time that the South American supply is going to be running out, right?
Yes. I mean, we're just now finishing up with them, so yeah.
It's going to be a convergence of a whole bunch of things all at one time.
It really could. It's going to be interesting. It's going to be interesting.
Well, I'm glad you pointed that out. Okay, we're going to come back here in a moment, and we'll dive into this livestock trade as well here on a Monday. As we get close to the end of the year, we're talking with Chris Swift, and we'll be right back. We're back with Chris Swift of Swift Trading Incorporated. Let's dive into our livestock trade, Chris. What do you think?
Sure.
You ready?
Yeah.
Okay, live cattle first. Here we go on the futures board. December is higher. It's 40 cents higher. We're 123.90. All the other months are lower by a little bit. February down 13 at 126.58. Now, you might explain this to our uninitiated that aren't familiar with how the futures work. December live cattle actually have deliveries, correct?
Correct, yes, physically delivered.
Now, explain why that's trading separately from all the other contracts real quickly.
Well, you're coming into delivery. This is the last couple of days of delivery, and what they will do is you literally do not get cattle brought to your front door. You get a warehouse receipt that says you have 45, 46 head of fine grade A number 1 steers sitting in Guymon, Oklahoma, or Amarillo, Texas, or wherever that feed yard may be, and then you start paying on the fees for freight and for feed and for water and for pen storage until you get them marketed to the packer.
You more or less, at the expiration, you own them.
You own them. They're yours. It's a futures contract that is deliverable upon the last trading day.
Unlike that, when you talk about feeder cattle, and let's take a look at feeder cattle prices. Now, we don't have a December futures contract on there, but if we did, that's cash settled, right?
Cash settled,
that does not involve deliveries, so it's a little different deal, and that's the way with lean hogs too. They're cash settled.
Correct.
January feeder cattle right now are down 20 cents at 145.35. The March down 23 at 144.57. So a general slightly weaker tone there, but not by a lot. On the lean hogs, now here you do have the December lean hogs, I believe, but there is no activity there. Let's see. No, I guess they're expired already in this case. February is the front month. We're 50 higher at 71.08. The April contract is 40 higher at 78.28. So there was a December contract.
Yes, correct.
It's just
expires
gone. So this is higher, led by the front months here. And you and I were talking during the break about the situation with China.
Yes.
And there's so much optimism that, they're actually going to sign this phase one deal.
Right.
50 cents? I mean, really?
I don't really know how to explain it. It has puzzled me this entire 9 months since we found out about it, of where and why the price is due. I assume that what we will see is probably more through the back door purchases, where China will have made an agreement with Brazil, with Argentina, with some other pork producing country. They begin to rob great amounts of pork from them. Now they come up short of pork. They have trade agreements with the United States that China does not. They begin buying pork from the United States, and it filters through the world. But there is a very heavy undertone for meat protein around the world. And we feel it. We just don't necessarily see it right here in the United States, because we are directly tied to the lean hog index that is a basis of the carcass cutout, and not due to exports or anything else.
Well, thanks for joining us for this very educational series today with Chris Swift about how the markets work. It's all intertangled.
It does. It does all work out at the end.
So thanks for explaining that.
Sir.
I appreciate that, and for pointing out the weaker dollar today, too. Chris Swift of Swift Trading Incorporated in Nashville.
All right. Thank you,
Hope you learned
guys.
something today.
Yeah, we certainly did.